Number of factors have stood out for Hyundai Motor India in its Q4, and several factors have aided that bottom line outperformance. Among them, the mix as well as the average selling price and the lower discounting in a pretty tough operating environment. I'm joined by Tarun Garg, who's the COO of Hyundai Motor India, to talk about the quarter gone by and to talk about the outlook going forward. Mr. Garg, thanks so much for taking the time. Let me start by asking about that volume picture. Understandably, for yourself as well as the industry, it's been a little bit of a sluggish period. Do you see that changing in FY26? What is the anticipation for volume growth for you?
Thank you. Actually, if you see, India is one market where the car industry has been steadily growing, over the past, of course, 30 years. I have been in the market now for 31 years. After every 5 years, there is always 1 year where the growth is muted, sometimes negative. I don't think it should really disturb us because post-COVID, we also all saw that market had grown by more than 20%, and again, almost 10%. So obviously some kind of a demand moderation had to happen. On top of it, a car customer does not like uncertainty with the tariff scenario and the geopolitical situation. Obviously that crept in. So I think this is very normal. Also, in any case, this period of April to August is a period where there is generally heat wave in the country. There are no festivals. So I think it's very normal. What we have to do is how to navigate this situation. You saw in our last quarter results how despite sluggish market, we were able to keep our discounts low by introducing some new value trims for the customers, by making sure that the SUVization continues. Our SUV penetration, in fact, in the last fiscal touched now 68.5%. The rural penetration continues to go up. The first-time buyers continue to go up. Overall, we could get a EBITDA margin of 12.9% for the year, and in fact 14.1% for the last quarter. So I think a good balance between volume and profit is what has helped Hyundai Motor India. Now we have a very aggressive product pipeline in place, and the Pune plant kicks in the third quarter of this fiscal. Yeah. So I think things are looking up.
So things are looking up, but then am I right in assuming that you will grow along with the industry, and what is that level of growth that you're anticipating in volume terms?
Look, if you talk about the next 5 years, obviously with the kind of model mix and the kind of new model launches and of course the Pune plant capacity being added, because we are currently at 824, we will add 170,000 in phase 1, which is in October to December quarter, and then 80,000 in 28. So which will help us reach 1.1 million. So we are definitely looking at beating whatever the industry growth happens in the next 5 years. As far as this year is concerned, we have given a guidance of an export growth of 7 to 9%, and domestic, of course, like I said, probably in line with the industry. SIAM is saying around 1%, so we should be broadly in line with that.
Okay. So thanks so much for giving me clarity on that. Would you say that with the addition of the new plant in the third quarter, overall, therefore, capacity utilization might be a little bit on the lower side overall in FY26, and that will of course pick up, Mr. Garg, over the course of the next 5 years, as you point out?
Look, Hyundai has always prided itself on having a very good capacity utilization. Over the past so many years, we have managed a capacity utilization of between 90 to 95%. One big reason for that has been, in addition to our very strong domestic presence, we have a very strong export portfolio. Currently, export constitutes about 20 to 21% of our sales. Going forward, we plan to take it up to 30% by fiscal 30. So I think while the new plant comes in, yes, initial period, obviously, it cannot reach 100% immediately. I mean, that is for everybody to know. But I think the kind of track record we have, we believe that, and the new model launches, we should be able to really reach a good number in a very short time. Exact month and exact numbers would be very difficult for me to give. But I don't think there is anything of very undue concern which is coming because of the Pune plant. On the contrary, I think it will be a turning point for Hyundai, like I said, because we have managed to marry our new model introduction with the capacity addition of the Pune plant.
Okay, talking about the market X, the ICE, so I'm talking about EV and I'm talking about CNG. In both of those, what is your opinion of the current playbook for your company? For example, can you give me a sense of what the current booking numbers are for the Creta EV, and what is your playbook in terms of CNG?
So look, as you know, Hyundai Motor India is a part of the Hyundai Motor Group, and the advantage we have is that we have all kinds of technologies. You know, at the entry level, we are offering the customer petrol and CNG. At the SUV level, we are offering petrol, diesel, and now with the Creta electric as well. Of course, in the Varna segment, petrol and turbo. So we are very confident that this kind of technology agnostic approach will really help us to navigate the future challenges. On the EV space, Creta EV has had a very good response. We are selling more than 1,000 a month already, and I think going forward, the kind of model plan we have, like we said, 6 EV models by 2030 we are going to launch. Also, it is coupled with a very strong localization drive. So currently we have battery packs which have been localized. Now with the Indian partner, we are going to localize the cells as well. Also, we are doing a big thing on the DC fast charging infrastructure, because so far we are focusing on the AC fast charging AC charging infrastructure. But now we believe, based on the customer research, we have seen that customers are hesitant to take their cars on the highways. So we have taken it upon ourselves to a big time focus on that activity. Currently, the number of DC chargers, including the DC chargers on the dealerships, is already about 88, 89. We plan to take it up to 600 by 2032. Okay. So I think CNG is about 13 to 15% currently, going up consistently. EVs, we believe by 2030 we should be in the range of 15%. And of course, we have also announced the launch of hybrids in the future as well.
Understood. Okay, understood. Now, I want to specifically talk about what you mentioned in terms of the SUV increase, right? Of course, as a country, there has been this move towards the SUV category, and as a result, the small car category has shrunk, Mr. Garg, and you've been witnessing this for 30 years, so you know exactly what I'm talking about. So would you say that, considering that the pricing of the small car is now coming very close to that small SUV category, that this small car category will continue to shrink? And what is the implication for you and your portfolio?
Look, I would say that the customer's choices have changed because his key buying factors have changed. So it's not as if the price range like for example, in the price range of 6 lakhs to 10 lakh rupees, earlier there was nothing called an SUV so much. You know, then of course the venue segment opened up, and now the extra segment has really opened up. So it's not as if the customers are not buying the cars, say in the 6 to 7 lakh rupees range. Only they are shifting from hatches to SUVs. Why? Because they are getting a good body type, they're getting more space, they're getting 6 airbags as standard, they're getting more features. So I think as an Indian, I'm very happy because this shows that people are progressing. That said, hatches are still about 23% of the overall market. Indian market is 4.3 million. That means hatches are still constituting about 1 million. We are very much there with i10 Neos as well as with i20. So I think we are a full range manufacturer. We need to give new solutions to the customer. For example, the dual cylinder CNG in Neos and Exter has really taken the CNG penetration up. And you know, like I said, Exter has been launched. Going forward, maybe some new segments will open up. What is the most important thing is whether the first-time buyer is coming to you or not. I think that is where Hyundai has been able to shift the first-time buyer from hatches to SUVs. And my overall portfolio first-time buyer has gone up from about 34-35% 5 years back to about 40% now. So I think there's no need to worry. And I'm very happy that we are progressing as a country.
Yeah, interesting. And I think that is what has had a bearing on your operating performance as well, that mix, what you're talking about, right? But speaking about segments, and you're saying that a few segments might open up, Mr. Garg, but can you give me a sense? You have a pretty wide bouquet of products, but do you see any gaps that you need to fill? You said that you have a very extensive pipeline. Can you give me a sense of what gaps you're intending to fill?
Look, obviously, new and new segments are always emerging. I already mentioned about extra. A few years back, even Creta was a new segment. In 2015, when we launched the Creta, SUV penetration was 13% of the overall market. Who would have thought that Creta will end up being the number one brand across all models? Last 2 months that has happened. So I would not be very specific here, but I would say that with full model change of the existing models, what happens is they become more bigger, and that is where the new opportunities come. So we are very clearly identified some of those opportunities. More details, please wait for the investor day, which we have already announced in September, where we will be giving a detailed deep dive into our future models and the new segments that we are going to enter.
I look forward to that. Mr. Garg, my last question to you has to do with the margin profile. And you mentioned the various reasons why it has come in at what it did in the fourth quarter. You've given us the expectation for both exports as well as domestic. But there are a few factors that played out in your export mix as well, with Africa having a larger share. That had a bearing on the margins. So would you say that you would either maintain or better your margins in FY26?
Look, it is very difficult to give exact future guidance, on the margins. But what is more important is your volumes increasing? Are your, especially in the export area, we are really looking at new markets as well. Like for example, Venue in Indonesia, Venue in Yemen. Going forward, we are going to have extra left-hand drive, which will open up some markets in the Latin American space. Already we launched the extra right-hand drive in South Africa. So EVs, we started with, Nepal, even Bhutan, where exports had been muted or banned, have opened up. So we are really looking at all kinds of markets, not only the neighboring markets, not only the Middle East and Africa, which have been very, very strongholds, Latin America. I think there are many opportunities to open up. A big factor here is, like I said, the capacity, because last few years probably capacity constraint, was making our export efforts a little bit muted.
Yeah.
But now we are going full hog on exports,
Yeah.
and we believe that going forward, exports can contribute 30% to our overall volumes.